Hello, everybody. We're back. It's time for Truth or Skepticism. It's Wednesday, December, 6th. I'm Tom Sosnoff. Dylan Radigan, you got the Tom Sosnoff look on today.
It's just literally two heads floating in space. It's some sort of a strange Star Trek episode.
Are you in the Northwoods? Are you in the Northwoods of New York?
I am indeed, with pleasure.
Very nice. Is it cold?
Yeah, but it's in the winter. It's 28 degrees, puffy snow. It's very nice.
Oh, you guys have snow.
Lots of snow and it's very charming.
You're going to do any downhill skiing this year?
Oh, most assuredly. Most assuredly. Maybe in the next few days. I mean, it's going.
Really?
Mm-hmm.
What's the closest ski area?
Whiteface is right here.
Oh, Whiteface. Right.
It's
Whiteface.
10 minutes. So that's your local.
Yeah.
So just do that.
I skied Whiteface once when we were in college. It was so cold. It was January. There was nobody there.
Minus 100.
I don't know, but they gave us blankets to go up on the chairlift with. It was so cold and we were still freezing.
Oh yeah. Well, honestly, Whiteface is one of those mountains that is 90% of the time a average or horrible place to ski, with all due respect to the management there. But when it's good, it's amazing. In other words, when there's fresh snow and it's not cold, it's a great mountain.
It's the other side of Stowe, isn't it?
It's across the other side of the lake.
Oh, other side of the lake.
Right? It's on the New York State side of the lake, so it's across the lake from Stowe.
Right. I couldn't remember. Okay.
Anyway, but it's sort of like the thing with skiing is sort of like local is your best skiing is your local is the closest mountain, unless you're going to go to a destination.
Yeah.
Because what are you going to do?
Yeah.
You're picking between 10 bad mountains, okay? Just go to the closest one. It's fine. They're great. Good, even bad skiing can be good skiing.
Yes.
All right. Can I use this as a segue to my topic? Actually, this is a good setup.
Let's do it. I'm Tom Sosnoff. He's Dylan Radigan. Here we go. Let's go.
As you can see, I'm wearing my black turtleneck, alpine attire. And we're into the December months here. And one of the great sort of power centers of financial culture historically, sort of in the same spirit as Charlie Munger or the same spirit as the Federal Reserve Board, is the OPEC meetings in Vienna, Austria, where everybody comes to Vienna in the winter and they get strudel and they get a hot toddy, and then they have a meeting and they decide the price of oil, and then they all go home and put the money in the laundry banks at Vienna. The Austrian banks hide the money, and everybody's happy. But now, whether it's the Federal Reserve chasing the bond market instead of the Federal Reserve leading the bond market, or whether it's the oil markets scoffing in the face of OPEC words or even actions, and also with the passing of Charlie Munger, although it's a different factor. But I guess my thought this week was I believe we are seeing the market really transition, because you were talking about the need for new leaders in your cherry bomb. So I was thinking about that, the leadership issues. And then as you detach, I guess the summary thought would be that the markets have ascended beyond humanity, and humanity no longer controls markets. Humanity is now in the hand of markets. There was a time when the price of living, whether it's the price of commodities, the price of money, the price of energy, was ultimately in the purview of this, governments and boardrooms of OPEC members and Fed governors, and that is no longer the case. And that is an interesting point of discussion, particularly as you move to a world where markets may do things that people don't like, but that people can't change in the way that they did in the past, with the OPEC example being the obvious sort of example from the recent weeks.
And
so I guess my first question is: do you believe that that the markets have ascended past the authority of man?
Okay.
Or can OPEC and the Federal Reserve or the government still intervene in a meaningful way?
No. First of all, OPEC hasn't been OPEC hasn't been meaningful in any way, shape, or form. I mean, have they had?
I mean, you could argue for decades at the end of the day, but certainly for the last decade. But I'm just saying the display, this recent display was very apparent with the Brazil. You know, it was it was like a public display of.
Okay, so this is not necessarily a new topic. This is a very radical topic. I have a radical opinion on this topic of
markets ascending.
Yeah. I think
over man.
Markets have been ascending over man for a long time. And I don't think we will ever see, unless there's a situation which is, unless there's a situation which is a threat to our democracy, which then becomes a threat to our economy. I don't see a situation where the man will ever ascend above markets again. I think
is this the inflection point, or is that?
No. This is not the inflection point. This has nothing to do with Charlie Munger passing or anything like that. This has nothing to do with the fact that the world just finally woke up and realized that OPEC has been meaningless for decades now, and that the Federal Reserve and the central banks have been equally meaningless. All they are is a storyline. All they are is a way to tie in, is for financial media to tie everything back in together. We have been essentially we've been a relatively, when I say relatively, like let's say 85 or 90% of the time, we are a relatively efficient free market, and it works relatively well. I mean, there are situations which keep everybody honest, which brings whatever it is, 10, 15, 20% of the time at max, which brings things back into question, and which gets people to suggest that, maybe the Fed does have some influence, or maybe OPEC does have some influence for a short-term emotional move and things like that. But the reality is, the only risk we have of man over markets is something, that is some person or thing that is a true threat to the global economy. And I can't think of what that is, but that
would be like Martians. It would no longer be OPEC or a central bank, or for that matter, a government, with the exception perhaps of the United States government.
I mean, there's, you can see, I mean, if it's a government, I mean, you can see obviously, Putin, I mean, but he's just an example of probably one of the most well-known, or in China, you can use it maybe as a little bit of example. We've never had that situation, in the U.S. I mean, we could handle Trump, we could handle Biden, we can handle, we could handle George Bush Jr. We handled everybody pretty well, and it doesn't really matter.
But anyway, markets over man.
Yeah, markets over man for sure. Always markets over man. Okay. Markets over man is an absolute. There's no such. But are you also suggesting that markets have been over man for the last 10 years? I'm suggesting, yes, that it's been. This is old news. I'm suggesting it's markets over man for a long time now. It's been probably, close to 20 years. It always happens with the growth of liquidity and capital. Once we got, when you're a small market, like less than $1 trillion or a few $100 billion, whatever it is, there's a lot more manipulation that can take place. There's a lot more inputs have a much greater influence on the market. When you get to the point where you're when the marketplace is bigger than all the GDPs of the globe combined, it's irrelevant. At that point, man is irrelevant. There's too much money. There's too much money chasing returns. There's too much out there. It's, And now, is there a world where the leadership, if the market if it's now markets over man, and if the leadership of man is in this sort of never-ending transition, sort of notable because of the Munger passing, but it's the wheels turn every day around the world, as we know. And I wonder if
the next leader that you were hearkening for in your cherry bomb over the weekend is not a young tech entrepreneur or a fintech guru, but rather it's some form of AI and market sort of funded, that it's a non-human expression.
No,
leadership.
Because AI is nothing more than the people that create it. So far, I am.
Yes, but it's the sum total, whereas everyone else is only what they are.
Of course. At this point, though, until I see something different, I am.
You're a seller.
I am very underwhelmed at this point. I'm extremely underwhelmed on all levels. When I talked about a new role model, a new visionary, I wasn't talking about like a specific person per se. I was talking about what will ultimately be a group of people, but it is time to replace. And this takes nothing away from Warren Buffett, from George Soros, from Charlie Munger, from Carl Icahn. This takes nothing away from their longevity and their successes at all, because I think they all have they played an important role in history. But the reality is that that markets move, and it's time. And here's the thing.
They're also all from the era of man over markets. Sorry to interrupt you.
Of course they are. No, of course they are. My uncle the same way, Marty. I mean, the same thing.
Man over markets.
Yeah, man over markets for sure. They believe it, and they have no reason not to believe it. It's always worked for them. The problem that we face now is that there's a disconnect. So, like, if you listen to like some of the, like, in my opinion, like Charles Hoskinson is a genius. And the creator of Cardano, he's brilliant. But when you listen to him, he has the concept of market structure and a free market, that it doesn't really exist. Like, he doesn't believe in it. And so, as crazy smart and as amazing as the technology is, I'm not sure, I'm not sure where that person goes, or how does that work. So I don't know. Maybe it isn't an individual. Like, it's not going to be the Elon Musk or the Mark Zuckerberg or that kind of thing. Those are
clearly not.
Yeah, no. Those are different animals. Those are entrepreneurs. I'm thinking more like a thought leader.
Yeah, a philosopher of finance, Munger, Soros. I mean, all this sort of.
That's why I mentioned
a North Star. Yeah,
that's why I mentioned like a Lex Friedman or something. Somebody just like little different. I don't know.
But I guess what I'm thinking about is you have the highest rate of change in history every day, right? Compounding rate of change in information and novel everything. Sure. You have a power structure and a legacy culture that is man over markets in transition.
Yeah.
And then you have markets that are just ignoring all of that and have immediately switched to an instantaneous digital markets over man, like a whole different.
Yeah.
But the digital only takes 1 second to do with that, which seems like it's just ripe for a tremendous amount of both opportunity and danger and tension between those two architectures.
Yeah. I listen. I mean, this is 2023 is a perfect example. I mean, didn't the Nasdaq's up 50% and the Harvard Endowment Fund is up 2.9%? Explain that.
Hyper concentration of wealth in megatechs.
Well, yeah, but. Like I said, the Harvard Endowment Fund, which is huge, is up 2.9%, and the Nasdaq 7 or 8 stocks, and they're up. Drove the Nasdaq to be up over 50%. How is that possible? How are they not benchmarked? There's.
You're saying how can the governance be so bad that can happen, and they can have such a delta between their performance and the market and an index?
Well, I don't know if it's governance. I just think that. It's over, like the old school way of we're gonna
man over markets just lost for the bajillionth time.
Exactly.
Yeah.
It's like it's done. All we've seen all year with respect to crude oil is OPEC trying to reduce the reduce the amount of flow to raise prices in every
That
time.
95, get that
Yeah.
$100 going.
And it's completely backfired. I mean, all we've seen with the Fed is that they play catch up, and they're not out in front. They're way behind, playing catch up all the time. So, I mean, I think at this point, anybody that thinks it's any different, they're crazy. But I mean, how can you change that? How do you change that that mentality? Globally. I mean, we have to do it organically, one person at a time.
But are you ultimately by forfeiting man over markets, you become a passenger of the market, not a director or a conductor of the market?
I mean, I don't consider myself a passenger.
So what do you consider yourself?
I mean, I'm an opportunist. So I do whatever I want to do. I mean, I use markets different than anybody else. I use markets, I use markets for whatever I consider to be whatever I think, wherever I think I see an opportunity, I will go after it. That's how I use markets. I use today's technology and what we've learned about strategy and management and all that kind of stuff to go after whatever sector or overperformer or underperformer or whatever else it is. I think that is, that's kind of the future. And I mean, it'd be a long time getting there for everybody, but I think that's the future.
And do you think that we'll actually see the leadership change in the next couple of years?
Leadership change in the sense, yes.
Across the board, whether it's in sort of,
Yeah. I do
new bank CEO, whether it's bank CEOs.
I'll tell you why I think it. I think I have a good answer to that. Because 20 years ago, the prototypical CEO I think it was Steve Jobs that actually I think Steve Jobs was the person that had the most impact on changing the entire, the economy in the long haul. Here's my reasoning behind it. There was a prototypical CEO of any, Fortune 500 company, Dow company, S&P company, in the 70s, 80s, and 90s. There was this prototypical CEO.
Lou Gerstner.
Sure. I mean, pick whoever you want. Pick the CEO of any, IBM.
All the companies.
GM, GE. Pick whichever one of those guys you want. Anyone you want.
Johnson & Johnson.
Exactly. Every single one. And then all of a sudden, in the late 90s, early 2000s, along comes, Bezos. Along comes Zuckerberg. Along comes the guys from Google. Along comes, the just a bunch of different, completely different, young, brash, smart, just completely different CEOs. And all of a sudden, it's a different universe of now where instead of creating $100 billion companies, we're creating $1 trillion companies and multi-trillion-dollar companies. Would Apple be a $3 trillion company today if it wasn't for Steve Jobs' leadership and the way he approached it? And the answer is, of course not. And so, and I think that whole slew of young CEOs, just a completely different approach, it changed the world of business, and that's what's going to happen in finance. It's going to be that new group, whoever they are. Right now, they haven't stepped up, which is a little bit depressing.
I mean, I feel like they've tried. I mean, there was a big fintech boom in London over the last few years. It's not big enough and it's not broad enough. You have the brokers, not just Tasty, but Robinhood and these others that have cracked, over there.
Yeah.
I mean, there's people are swinging. Even crypto, we have crypto moving back up here,
Yeah, I mean, I wish that we didn't get set back with the CZs and the, SPFs, and I wish it was guys like, the guys that Vlad Tenev at Robinhood and those guys, were better at it, and they stumbled a lot, and unfortunately, but they have potential. I don't think they're the grand thinkers yet. I'm not convinced that that's who it's going to be. Maybe, but I'm not convinced yet. And listen, I just,
I mean, well, because the other, one choice, they either come from the yard, right, like the ones we're talking about, or they come because they're Jamie Dimon's protege. or because they're, whoever's protege at Bank of America. I mean, it could happen inside out, I guess, but it just seems much more likely to be outside in, to use your.
It's got to be. It has to be outside in. It's not going to be somebody that's Jamie Dimon's protege. I mean, it's different being Steve Jobs' protege, but it's not going to be Jamie Dimon's protege, and it's not. It's not going to be from that world. That world is, that's that's not the world. That's where you go to die. In 99% of the cases, that's where you go to die, in that corporate world.
I want to return to something you said that was quite interesting regarding the lack of market structure with your friend at Cardano.
Mm-hmm.
What do you exactly mean when you say he doesn't believe in market structure?
I mean, their world is they look at the world as, completely decentralized and with this decentralized efficiency that I don't know if we're anywhere close to that yet. But that is
meaning it's a layer of just nodes and smart contracts with self-matching prices that then automatically execute without any central.
And essentially, peer-to-peer trust and everybody essentially, the marketplace essentially, guaranteeing everything. And it's just, I'm not sure we're there yet. I'm not sure we're ready to get away from, I'm not sure that world is big enough. I don't think it is even close. I think, we're not ready to go away from a centralized clearing world and where people, I'm not sure that people are willing to commit huge dollars yet to something where they're not 100% sure that it's guaranteed and centrally cleared. And I don't see that happening anytime soon. And I think that their vision's just a little too,
utopian.
It's utopian. They're dreamers. I get it. Some of them are brilliant. The technology is incredible. They're the closest thing we have, but they're not there yet. They are not there yet.
They're the closest thing we have, you're saying, in terms of some sort of leadership position, in the sense that at least they're trying to leap out into the future with some really extreme vision and try to sort of press in that direction, that they've staked a direction.
Yeah, I mean, there are people in the world of finance, that have been out in that whether they knew what they were doing or just happened to fall in their laps, that they have changed finance. Like Jeff Yaz from Susquehanna and Ken Griffith from Citadel. They have changed the world of finance forever because they've added so much liquidity into the system that the financial worlds are forever, everything's changed now. Nothing happens on an exchange. Everything is, it's a level playing field for everybody, whether they knew what they were doing at the time or not, or whether it all just happened that way, it's pretty incredible.
I mean, if you start with the disappearance of currency, whether it's into crypto or just through the payment function of the phone, where payments becomes really nothing more in the sort of virtualized to a scorekeeping, with losing, you're not, forget the gold coin, you don't even have a piece of paper. And then that funnels its way into a world where gambling is part of what happens in Las Vegas, and efficiency, the markets now dominate man. So the whole idea of getting an edge through some version of a man-driven action has lost its luster. And so I want to be more mechanical to it. Like, where does that money, if you were to pool, who's loses in that deal? Where does the money not going because the money is going to that world of flow of payments and then
well, you're cutting out the middleman, so the money doesn't go to large financial institutions. The loser is large financial service companies, insurance companies, advisors. That's the loser in the process.
What about the credit card companies?
I mean, the credit card companies serve a different purpose in the world of finance. I don't think that they're impacted as much. I mean, could the credit card companies be disrupted? I would think it's relatively easy in today's world, much easier than it was, let's say 20 or 30 years ago, when it would be impossible to measure risk other than in a traditional way. And I think in today's world, you have so many other vehicles for measuring risk that your ability, just the same way that risk in like the derivatives world has completely changed over the last 20 years. And now we can manage risk of, let's say, 10 million positions as opposed to 1,000 positions. I think risk with individuals, being able to lend them money and what they're capable of paying, and to create basically an exchange. I mean, you're saying a sort of optimization of individual credit in real time. Well, I see no reason why Dylan Ratigan can't take the other side of a Tom Sosnoff debit. Like, so
Tom wants to buy coffee, I'll get him $10 for a couple of coffee, 2 cups of coffee.
I see no reason why you wouldn't lend me money, because my whole financial history is pretty much going to be public at some point in the future if I want it to be. Because so let's say that I'm a borrower, okay? Tom Sosnoff is a borrower. So I want to borrow $100. In order to borrow $100, I can have a choice. I can do it anonymously on my credit card, okay? And I can borrow at whatever, 21, 25, or 30%. Or I can expose my, all my credit history and to Dylan Ratigan or anybody else.
Or some app, the people's.
Of course, it's
lender.
an app. Yeah, of course, it's an app. And the app competes for peer-to-peer lending, where you will lend me money at 6%. Or let's say risk-free rates are 5%, you'll lend me money at 8% because you like the risk reward. And I would do that in a heartbeat. Like, I'll lend. And
basically, you could submit your financial history, your credit score, and whatever the credit card company has.
And you can you can diversify. So in a perfect world, and this gets back to the whole blockchain, blockchain logic and the future, what future economies will look like is, so Dylan Ratigan wants to borrow $100. And we know your credit history, but we want to make a better market than the credit card companies. The credit card companies are at 25%. 100 people are going to lend you $1 at 15%, or maybe lower. Then all of a sudden, okay, those 100 people have very much diversified their risk because they didn't lend you the whole $100. They all just lent you $1, so they can handle it, and they're still getting 3 times the risk-free rate.
They're getting 15% on their dollar.
They're getting 15%,
which is triple the market.
Which is triple the market, and they're beating the credit card companies, which nobody has any love for anyway, by 10%. So everybody wins. I get a better rate on return on my money. It's not risk-free, but it's the closest thing because I know everything about you. I'm fully diversified, and I carped out the criminal element of the credit card companies who are charging 25%. What ultimately happens is what happens in the financial markets. So risk-free rates are 5%. I lend money to Dylan Ratigan at 6.5%. Okay, and the credit card companies come down from 25 to 18%. So ultimately, it gets that tight, and that is the beauty and the future of what is going to happen, which is why all those credit card companies are going to be disrupted.
And what's the prerequisite? Like, in other words, so let's say you could draw out on a whiteboard, you could go full, beautiful mind for us and just sketch out the flow and matrix. And there's no shortage of technology or financial executives available to you at this point in your life, and people like to listen to what you have to say. What is the barrier between what that would look like, which would be some version of your Cardano friend, like it's in the direction?
It's a version of what currently exists today on the blockchain. That is why Bitcoin is trading for $45,000. That's why all these pieces of technology are so damn expensive right now, because that's what you're looking at in the future. People don't. I think the concept of what's going to happen peer to peer, the concept of what this technology is capable of doing, what smart contracts are going to allow us to do. I think it's and with the whole digital world and digital wallets and everything, I think it's going to disrupt a lot of businesses, and I don't see how it's not going to. It's going to disrupt the trading space, because in the next year, and this is a lot of stuff we're working on, you are going to be able to be on the other side of any market you want to be. So Citadel might be on the other side, and Dylan Radigan may be sitting side by side with Citadel.
And will there be a point where it's uniform tokenization, so there's no border or currency issues either, where basically every security has been tokenized and is now transnational, transborder, transcurrency?
There will be a lot of protection. There'll be protectionist regulation everywhere, because everybody has to protect the integrity of their financial markets, but it is going to be borderless. It has to be, but there will be a lot of we're not ready for universal currencies or borderless.
But if I can use crypto to buy a menu of 10 million trades, as you described,
yeah.
Some of those are in South America. Some of those are in Mongolia.
Yeah.
Some of those are $1 for Tom to buy coffee. Some of those are whatever they are.
I mean, how are you going to stop it? Who's going to stop it? How's any of this going to be stopped?
I think you got a version of that.
Yeah, who's going to stop it?
From the DOJ. The U.S. government has the only chance.
Yeah, they can't stop it. It's not possible. It can't be stopped. It's just like it's a joke. It cannot be stopped. None of this can be stopped. It's going to happen. It might not happen tomorrow, but it's going to happen. It's all going to happen. And it's going to happen on.
And then does that end up in in Elon's Everything app, where basically I can go onto my app, whatever, if it's not his app at this point, but some app that basically is a menu of all risk and credit and whatever, and then a bajillion ways to slice and dice it, but not I guess at the end of the day, you're always going to be subject to the securities laws of the jurisdiction. The question is how the tokenization gets around that, basically, as an operating premise.
It is a very interesting. I don't know the answer. I would assume so, but yeah, I don't know the answer. But I obviously think we're going to get there, and I think it's important. But again, we need thought leaders. We need visionaries. We need people to inspire other people. We need a roadmap. We need people to take chances. You remember Steve Jobs got fired by his own board because he took chances. That's what it was. He took chances. They didn't think. Elon probably should have been fired by his own board, but he didn't somehow, and he took chances. And I think that, there are, that's I don't know who steps up, but that's what's going to happen. I believe it.
If you were to look to the market right now, mm-hmm. which I know that's not your favorite topic for this thing, but I think it's just the movement in the bond market recently has been, I think, that the whole shift in expectations, and then also the absence of the oil. Look at oil. It's a mess. I know that you're on the other side of this, apparently, according to Josh, but that's not why I bring it up. I'm just basically is the market seems to be saying that that the recession is a real thing and it's coming soon, and that this is going to be, we're going to be cutting rates. Like, it's going to be a whole nother story. Not that you are invested in stories, I know you're not, but that this is a inflection point in the whole discussion of the markets, from inflation and rising rates to inflation and layoffs and slowdown and rate cuts and oil, that you're moving into a recession marketplace.
We're at record highs. Why would you think that for 1 second?
Because of the movement in the bond market.
Really?
And because
you don't think the movement in the bond market was because way too many idiots sold it into the hole, and then at some point they panicked? It went to such a level on the downside. It was the most oversold product I've ever seen, and so it bounced back, and now it's all of a sudden it's because we're going to head into a recession. Of course not. That's an insane. I would yell at Vanetta if she'd say that to me as a headline. Hey, we got oversold. And we bounced back more. We sold off more than people thought, and we bounced back more than people thought. Why is it anything more than that?
I didn't mean to touch a nerve. What's going on with oil?
Well, what do you mean? What's going on with oil?
How can the world be at record highs?
Yes.
With the world is your beautiful place, and yet the oil price is indicating at the very least lack of supply control, but more possibly demand slowdown.
What it means is that the Saudis and a bunch of other Middle Eastern countries, which were playing these manipulative games for as long as they could keep the fake facade up there, they tried to get away with it. And you know what? It worked for a while. There's a lot of dumb people out there, and eventually it didn't work.
So you're saying they've been outed. The emperor has no clothes, so therefore oil.
Exactly.
Oil doesn't have to price based on the threat of the king making a decision. It trades where the market is, and the market's in the 60s. It's not in the 90s.
The market's probably in the 30s or 40s. It's not in the 90s or 100s. I mean, much to the chagrin of the, Saudi Aramco and everything else, but who gives a crap? I mean, the best thing, how is low oil prices bad for anybody? Even if you don't even own a gas car, I mean, low oil prices is like
no. I mean, I think it all depends on the reason why. I guess I would say.
Low oil prices is good for everybody.
No, I like that perspective. I like that perspective better than the slowdown is coming.
Yeah, forget the slowdown. You know what? If the slowdown comes, then people go, "Oh my God, the writing was on the wall." Well, the writing's been on the wall 75 times and slowed down once. We're at record highs. There's no slowdown.
What about your friends in China? Have you looked at that FXI chart recently? That looks like a whole mess over there.
It is a whole mess.
The mess. It has been for years. For years, I think it's been a mess now. I feel like this is.
They can't buy an uptick. And you know what? I'm long China, but in a strange way, I'm really happy what happened in China, because here you have, what they tried to do in China was manipulate the markets. And it failed. It failed miserably, like it always does. And you know what? They're paying for it. The Chinese government essentially set them back a decade. They were on a path. They were on the same path that Japan was in the early 80s. And the Japanese markets got ahead of themselves. The Japanese government butchered everything, and then they've been stuck in no man's land for 20 years. China did the same thing. They got ahead of themselves.
The 1980s were 40 years ago, sir.
40 years ago. Okay, 40 years. So China got ahead of themselves, and then they basically tried to, not necessarily fix everything, but slow everything down. And in the process of doing that, they destroyed their own economy. I find it, I guess at this point in my life, the incompetence of different governments and the people that run those, most cases democracies, but in other places, whatever you want to call it, the level of incompetence used to blow my mind. Now I expect it. Just like the level of most CEOs and big businesses and decisions people make, it used to blow my mind how stupid people were. It doesn't anymore. Now I kind of just expect it.
Now you're like, oh, Bob Iger made a bad decision, of course. Sure.
Yeah.
No problem.
Yeah, sure. He'll be fine. But sure, he'll be fine. The one thing I like about Bob Iger's of the world, at least he takes shots.
For sure. He's a shooter, for sure.
Yeah, he's a shooter. So I don't mind shooters.
Yeah.
Shooters.
So I was thinking about your at one point you've said to me that this is a little bit of a non sequitur, but you were said to me that the ultimate, I forget how you described it, whether it was the ultimate sort of kingpin or power trip or ego trip or whatever, was a pro sports team owner. That it's the ultimate dictator. I think you were saying that there's no more power than to be a pro sports team owner. And I was thinking that you should probably buy a pro hockey team.
Why?
They traded a massive discount to the other pro leagues. And you could do like a Mark Cuban job and spin them up. You could probably buy something for a few $100 million. Get it off at you would put together a team. We call Scott, we'll call everybody, pass the hat.
Oh my God.
Maybe buy like a AAA hockey team.
A AAA hockey team now.
Something cheaper, just for the just to see if we could, if you just to pretend. You're like, it's like a poor man's Jerry Jones. It's like you own the minor league Chicago hockey team.
The Wolves.
Yeah, that's who. I think that should be the sort of what we can form a group. We'll do it as a group. It'll be we'll call them the tastylive Wolves.
And we're doing this for what purpose?
Fun.
Yeah, I mean, I think it'd be fun. I think the cool thing about owning a sports team, when all these crazy rich guys, do it as a sport, they realize quickly how hard it is. It's really hard. Not hard to be an owner. It's hard to win.
Yeah.
Yeah. So,
but that's why you start with a AAA hockey team, so that way there's not so much pressure as an owner. Lower stakes poker.
One of my friends really wanted to own a sports team, and they couldn't afford anything, so they bought a lacrosse team. I didn't even know there was a professional lacrosse league. It wasn't very expensive, but whatever it was, they bought a professional lacrosse team in Connecticut, I think it was. And about 6 months after, because the money they had put up was all gone and everything else, they're looking at this team, they're like, what do we do with this? So because they were contractually obligated, they had to pay more money to have somebody take. So let's just say they bought the team for $100,000. Okay, I don't know what the actual number was. So it was more than that. It was a lot more than that. But let's just say it was $100,000. They then had to pay somebody $100,000
get out
to take the team away from them. So they had to pay twice. They had to pay what they bought it for, and then what they had to pay somebody else to take it off their hands. And
that's what'll happen with that hockey transaction for sure.
I'm like, that's not a really good trade. And they're like, oh, genius, thank you.
You're like, thanks for the expert opinion.
Yeah. I just always got a kick out of that because that's, I think, more what it's like when you buy a sports team.
And that's what I'm getting at. I'm like, listen, but I think that hockey, there's leverage in hockey. I think hockey has room for growth.
Oh boy. All right, we're off topic. What time is it? Oh, 1:45. Okay, we got there. Beautiful. That was a fun talk. Challenging.
Markets over man. Markets over man.
Markets over man. No question about it. I'm Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism every Wednesday, 1 p.m. Central Time. We'll see you next Wednesday. Thanks, Dylan.
Bye.
Goodbye.